This is who I am. You can get a hold of me at contact@mercenarygeologist.com. We will respond to every email unless you are a troll. There's the website, and we're very active on Twitter at Mercenary Geo with 48,300 plus followers. And every Friday after I do my weekly review for Kitco, the Metals, Money, and Markets Weekly, we end that with a new Twitter poll, quite popular and provocative. We call it the Parting Snark. As usual, I'm not a certified financial advisor. Anything I say here today cannot be construed as an offer to buy or sell, go long and short any financial instrument. The outlook for commodities, quandary, conundrum, or chaos. So this all started, well, it started a long time ago, but the catalyst was the Kung flu, the Wuhan virus, COVID-19, or the panda pandemic, whatever you want to call it, resulted in massive money increases worldwide, but especially in the United States. Also anti-development political agendas that have really affected English-speaking countries now in the first world. Green mandates and initiatives, anti-development once again, trying to socially engineer economies. Once again, when commodity prices get high, resource nationalism rears its ugly head. Usually that's in the second and third world, but it is increasingly affecting first world countries now. Chinese lockdowns, those have come down recently, and the Russian-Ukraine war has been a minor component lately. The results of all this have been supply disruptions and destruction, labor shortages, civil unrest, riots in the street, and wage increases, which unfortunately nowhere in the world are keeping up with the rate of inflation. Supply chain breakdowns, that was a big deal, especially in the United States in the fall. Those continue. Those container ships backed up in the ports of Los Angeles and Long Beach are still there. They've eased off. We don't have enough truckers in the United States. Part of that is because of energy costs, which have skyrocketed, and that money supply increases has directly affected the price of fossil fuels, and that's led to severe power shortages, especially in Europe and Asia, and affected base metal supplies because electrolytically refined zinc and aluminum consume major amounts of energy. All told, this has led to very profound futures markets turmoil like we've never seen before. If you remember in April of 2020, when the next month contract for oil and gas went to a negative $37. So there was no place to supply oil in the U.S., and traders couldn't even unload physical oil for a while. They had to pay to store their oil. So net result, base metals, spot price peaks, and these all happened the last couple of months. The ones highlighted in yellow are all-time highs. Aluminum, $1.97, copper, $4.80, zinc, $2.05, all-time highs. Spot price. Lead, high, but not an all-time high because most lead's recycled now. Nickel, just off its all-time high. It hit basically $22. I think the all-time high was something less than 24 during the global economic crisis of 08-09. And tin has soared more than triple its base price to $22.07. So we'll look at a couple of charts And this is the copper chart, very volatile, hit that all-time high a couple of times. This is basically January of 21 was when Biden was elected and took over. We see that immediate spike increase. We're still at near, 20% off the all-time high right now. But markets have taken a big dive in the commodities, and that's basically due to a 19-year high in the U.S. dollar recently. Here's 10. So it's gone from a base price. This is once again from when Biden was elected. The base price before that was about $7 a pound. It hit 22. It's now backed off 50% off that, but still double the average base price over the last, say, 10 years or so. Precious metals spot price peaks. A bit of a different story. Gold and silver. Gold hit all-time high at 2067 in August 2020. Hit at 2048 a couple of months ago. Silver never made it out of the backwash. All-time high $50. It got to 29. It's trading about 21 right now. Platinum, palladium. Platinum hit 1288, but that's about half of its all-time high in 2008. Palladium hit its all-time high in about 3 months ago, and this is due to fundamental supply deficits ongoing. Look at a couple of charts here. Here's the gold chart. Looks very similar of the bull and following bear market from 2009 to 2014. This would be from the last year of Trump's presidency. And you can see the low during when all markets crash. What happens when markets crash? People get margin calls. They sell the only liquid thing they got, which is gold. And we saw that in April of 2020. I bought gold then. I missed it by a day. I think we bought it 1483. Its low was 1473, so timing was pretty good. And you see what's going on now over the last month or so, and that really is due to the fact U.S. dollar index is at 104, and a year ago it was about 98 or so. Palladium, we're looking at a much longer term for palladium here. So this is a month-long chart of palladium, and what we see here is the base price over the last 5 years, and it was more or less $500 plus or minus. Then we look in the 5-year, and this is when the real supply deficits came in on platinum. And the reason for that is palladium was the reason was platinum prices were so low that platinum mines shut down in South Africa, and palladium is a byproduct of platinum mines. So that created the supply deficit in palladium. South Africa produces about 75 to 80% of the world's platinum. It along with Russia, produce somewhere a total about 75% of palladium. So palladium's been in supply deficit. Demand has been strong. Palladium's basically used for catalytic converters in gasoline-powered internal combustion engines, and so very volatile. Over the last month or so, we've seen platinum go from what is that, $2,800 an ounce, hit the all-time high. That was an intraday high, and now I didn't look at it today, but it was trading back down around 1,900 last week. So very volatile. Same thing with energy resources. Spot price peaks. WTI 124, all-time high in 08 was 135. Henry Hub gas recently at $7.50. That was a 15-year high since '07. LNG, all-time record high. Delivery in Asia and Europe, $37. So compare that to Henry Hub, which is the U.S. benchmark. Now you know why there's a race to export U.S. gas, liquefied natural gas, to Europe and Asia. U308 hit a 11-year high about a month ago, $64. And Newcastle coal, the world benchmark for thermal coal, soared more than triple its, well, that's actually quintupled its base price. So we'll look at some charts. Here's oil traded over the last couple of months, plus or minus $1.05. This is a big driver of inflation. The world runs on oil, King Oil. It's not going to change anytime soon. You can see in April of 2020, back at the beginning of that chart, where it went negative for the month of April. Spot uranium, $64 a pound about a month ago, $50 on Friday. This catalyst here really was Sprott Physical Uranium Trust, which started buying physical uranium in August of last year, and you see that huge spike. Basically, they're taking surplus uranium off the market and stockpiling it for future price increases. They now own about 56 million pounds of uranium. To put that in perspective, the U.S. uses about 50 million pounds a year and supplies 30% of the world's nuclear power. 20% of all power in the United States is nuclear, so that means that 1 in 5 people turn on a light switch powered by a nuclear reactor. Here's Newcastle thermal coal, base price about $70 a ton, soared to $430. It's been very volatile since then, but currently trading about 4 to 5 times base price. So these are all inputs into costs for people, and this is really the big driver of inflation. So who's to blame? What's to blame? Central bank monetary policy starting in 2000 with the crash of the dot-com bubble. U.S. Fed created the housing bubble, then created a commodities bubble. Too big to fail corporations bailed out, multinational corporations bailed out with increased money supply, printing money basically in '08 and '09 to pull us out of the global economic crisis. Tax and spend politicians and their forever wars in the United States, appropriating more money. Biden now wants to give $33 billion more to arm Ukraine. In the U.S., record trade and budget deficits. Catalyst, really, the Wuhan flu economic lockdown started all this, and really exacerbated by socialist, globalist, elitist, one world government policies have now spread worldwide. You see it a lot in Canada now. Your Excellency, as I like to call him, Justine Trudeau, is a WEF devotee. So here's what I now refer to as inflation, shrinkflation, stagflation. Stagflation being rampant inflation along with economic recession. We are in a recession right now, and you see when that happened. Look at the chart. And if I carried the chart back to year 2000, it would be plus or minus 2%. As soon as Biden got elected in January of 2021, you see it. He took office 2%, now at 8.5%. And that's using the way they calculate it now, or they eliminate a bunch of stuff. If they did it the way they did it in 1980, it'd be about 17%. Go to the gas pump, go to the grocery store, and see how things have inflated, shrink, and so it goes. Is there a solution? Absolutely, there's a solution. We've been through this before. You know, in Spanish, there's a saying: "No hay problemas hay solamente soluciones. There are no problems, there are only solutions. And what we have to do is just like the late 70s, 78 to 82, you got to reduce the money supply drastically. And that's easily done by the Fed. It has to be done now. You have to raise interest rates a la Paul Volcker in 1982, raised interest rates to 14% and brought us out of a recession. You've got to generate positive real interest rates so people have a reason to save and invest, in bonds especially. So in the U.S., and really I'm a U.S. guy, although I do have a condo here in downtown Vancouver, you reestablish national economic independence, and especially in energy, minerals, manufacturing, and supply chains, and we can come out of that. And then most importantly in the U.S., doesn't really apply to our border with our friends up here to the north, but we have to secure our borders in the U.S. You know, we're being overrun by people from 135 countries coming in willy-nilly and illegally. Results and ramifications of this are not going to be happy. You're not going to be happy. This is drastic. It's going to cause a major correction and perhaps crashes in stock markets, worldwide economic recession, supply shortages, even more drastic than now, in raw materials, goods, and especially food. And when people get hungry, they riot and they insurrect. So, but the net result is inflation is tamed, and that's the key to all this. We will have a reset of capitalism and an economic recovery. If past is prologue, that's from William Shakespeare, by the way, the time frame for this should be 2 to 3 years, but it will be painful, folks. So what's a man of means to do? Well, here's what I do. I'm reducing my exposure to all equities right now. I'm exiting stock markets, not only junior resource, but other markets, especially high-risk speculations in the junior resource sector. You take profits when you can. You sell break-evens when stocks come back to your break-even point. You take tax losses at year-end for the stocks that have no hope. Reduce your exposure to large metropolitan areas. I'm not going to spend much time in downtown Vancouver anymore. If it comes down, folks, the metropolitan area is the first place that's going to have runs on food. Purchase a second or third residence in rural areas. I own 2 of those in the United States. Buy stuff with your cash now, because if you buy it today, it's going to be cheaper than if you buy it tomorrow. Gold, for me, physical gold, farmland in rural America, and you live free or die. There are worse evils than death, or so said General John Stark, Revolutionary War hero. I run a free subscription newsletter. I write about once a month now. I've decided to kind of semi-retire. You can sign up here. I'm a good old boy, American hillbilly redneck, and you probably get where I'm coming from this talk. My mantra is and will always be, do not tread on me, and I will not tread on you. Thank you very much.